probably be locked by the frost. Trying to hustle some.
It's your boy Crypto Blood, and welcome to another episode of My 2 Cents. This morning we're taking a look at what happened yesterday. It really Sunday night surprised everyone. China does a cut on the reverse repo rate, and that sends the Dow over 28K for the session on yesterday. Asian stocks rally as well. We're going to take a look at the details on this. You know, what should your game plan be? It surely isn't what most are telling you on YouTube. I know the precious metals people are going to hate me, Peter Schiff, all those pundits, and we're just going to look at the facts here today. You know, that's all you can do. Opinions aside, you have to look at the facts, and the facts are the US stock market is at all-time highs. Gold is down over 6-7% from highs. We have to pay attention to these things, people, and not just go with the narrative that, you know, gold is going to go up, silver is going to go up, and, you know, the stock market is going to crash at some point. Possibly the stock market will crash, but in that time between now and when it crashes, what if we see $50,000 Dow and you miss out on even more returns in this perverted upside down stock market and bond market that the Fed is creating, that most of the central banks around the world is creating for us? It's very sad, but these are the times that we live in, and we have to adapt to this new narrative and new environment that the Fed and central banks around the world has created for us. So let's take a look at what's out of zero hedge. U.S. futures breach new all-time highs as global stocks approach new record on unexpected Chinese rate cut. So this was the first rate cut that China had done, and it came out of nowhere, but it's the first one they've done in about 5 years, 4 to 5 years now, and really took a lot of people by surprise. Trump wants to do any and everything he can do to keep this market going higher, because he knows the sheeple only really look at how they engage, how the economy is doing based on what the stock market is doing, unfortunately. And it says, while the U.S. equity futures drifted even higher into all-time high territory on what many thought was a trade deal, but in reality is the Fed and ECB's injection of $80 billion in liquidity every month. World shares were also close to record highs on Monday after Beijing surprised markets by trimming a key interest rate for the first time since 2015. So as I stated, about 5 years at this point. And even though it was only 5 basis points, it just still sends that signal to the market, guys, that there is nowhere but the equity markets to go. They're driving everyone into the equities markets, and confirming what was just said on Friday, that China has major structural problems that are far greater than just its GDP and slowing economy, and that the PBOC will be forced to step in with support. And hey, that's what happened just on yesterday. China's central bank cut rates on 7-day reverse repo purchase agreements by 5 basis points. And if you guys don't know what a reverse repo rate is, I think one of my last guests, Jim Willie from Golden Jackass, really explained it perfectly. So check this out really quickly.
Did another rate hike, and I thought, okay, what are they going to do this time? They have to play a game. What they did was they played a game with the excess reserves held at the Fed on behalf of the big banks. But the ugliest of all was the reverse repo, and I need to define it and to explain it. It's not hard. If a repo by the Fed is to buy their bond, a reverse repo is to give them back their bond. Why on earth would the Fed want to give back the bond to the big banks and take their cash if the bank is short on cash? What's this all about? I'll tell you what it's all about. It's about to relieve the pressure of a failed treasury auction, because you cannot leverage cash. You can't say, well, we got $1 billion in cash, so we're going to buy $10 billion worth of treasury bonds. No, no, no. You can't leverage cash.
And so hope that really explained what the reverse repo rates are. But the news helped Asia's market close higher, surprising various experts who would not reconcile the warlike scenes out of Hong Kong and the jump in the Hang Seng and Shanghai Composite. And in Europe, well, they followed suit. Though early moves showed the initial reaction was cautious, the Chinese intervention helped nudge the MSCI's 49 country world share index up 0.12% to leave its less than 1% off the high that was set back in early of 2018. And look at the MSCI World Index. Again, we are just driving everyone into these equities, and this can't be good. It's so bad that even many, and we'll talk about this in a second, many active investors are having to turn passive. They can't beat the markets anymore because it doesn't matter what earnings are. It doesn't matter how well the last quarter was with any particular stock in general. They're making all this liquidity is driving into ETFs and various index funds. It goes on to say that as the region digested the unexpected cut in the PBOC's 7-day repo rate, Asian markets resumed the momentum from last Friday's record-setting performance in the U.S., where all major indices notched at all-time highs, and the Dow Jones Index breached 28,000, a milestone for the first time. And as I've stated, guys, look at this. CNBC, 52-week high today. Really, this is an all-time high as well, and we just keep climbing and climbing, and we're going to go higher. I think we're going higher. I think we're going to have that melt up stock market that only a few alternative news analysts have predicted. I think we're going to melt up to past 30,000 on the Dow Jones. And I don't think gold is going anywhere. If we take a look at gold really quickly from the COMEX futures, I mean, we're down in gold. We're down currently 6.2% from its highs. So it's not reacting the way we thought it would, simply because central banks continue to pump more liquidity and made up money into these markets. And so if we have a chase for yield, these Wall Street guys aren't going to be buying gold. Gold does not yield anything. It is a non-productive asset and will yield you nothing, only a protection against inflation in a normal market. I have to stress that, in a normal market. And as I've stated just a few minutes ago, a lot of guys are throwing in the towel. A lot of these active investors can't do it anymore. The world's most bearish hedge fund, going down swinging, it says, loses 75% of its assets after the worst year on record. And we can't forget the quote, "Don't fight the Fed." And this is what many people are doing still in the markets as active investors. They're trying to fight the Fed. People aren't paying 2 and 20 for passive investing for the most part. And this is what happened to Horseman Global's CIO and owner Russell Clark. In fact, in his ambition to one-up the central banks, Clark may have overdone it, because according to his latest investors letter, the fund's equity net short position is now the highest it has ever been in history at a whopping negative 110%, offset by 60% net longs in bonds. While there may be some admiration for Clark's courage, there's less empathy for the fund's performance, which has seen better days. And after slumping 6% in October and losing money on 4 of its past 5 months, is now on pace for the worst year on record, down 27% year to date, surpassing the 24% year returns posted in 2009 and reversing all the goodwill the fund created with its 7.5% return last year. And Clark actually told Bloomberg in May that he's betting it all on a market crash. While it's not a new bet per se, Clark doubles down on his bet against the custodians of market stability, namely clearinghouses, and in his last letter ties it in the growing liquidity problems revealed by repo market chaos. You'll probably see the top when most of the ultra perma bears, the super bears, give in. They throw in the towel. That's probably when the market will turn around. That's normally how it goes. That's maybe something you should keep an eye out on. Which of these active fund managers are actually throwing in the towel and giving up on their short positions. And so Zero Hedge reported yesterday that Morgan Stanley finally capitulated on its bearish bias when its cross-asset strategist Andrew Sheets said that the bank was upgrading global stocks from underweight to neutral, but he needs to go from neutral to buy, to be honest with you. Zero Hedge says they were not sure if the bank's U.S. equity strategist and staunch market bear Michael Wilson would join the crowd. Yes, and indeed he did. But a close read on his report published this morning, in which he upgrades his base case target on the S&P from 2750 to 3000 after he too got a tap on the shoulder. Wilson also explains that there was just one catalyst for the reversal in the market, the same one That could also send the S&P even higher than 3,300 by the end of the year. He says this year the Fed elevated asset prices despite broadly slowing growth, somehow something we identified in 2018 but missed this year. As the Fed continues expanding its balance sheet, you hear that? As the Fed continues to expand its balance sheet, that's QE, guys, QE4 to be exact, by 60 billion a month, the S&P 500 could overshoot the upper end of our year-end bull case of 3250. So this is a nightmare. This is just a complete circle jerk of nonsense that the Fed has created, and I'm telling you, they have no clue what they're doing. Really never did since 2009. They just knew they had to bail out the banks. After that $1 trillion TARP money, they had no clue what they were going to do. Absolutely no clue. And so they're creating all of these bubble prices in various markets, and you know, they don't even know how to plug any of this stuff. They're creating holes left and right in the dam, and they have no clue what to do. So the question is, do you ride the wave? Do you ride the wave and risk not being able to time the top? Because normally 80-90% of the people can't time tops. So do you risk being in the market and, you know, trying to stay in as long as possible and getting out later, or do you get on the sidelines? Now that is the biggest question of them all. That's a question I can't answer for you. Unfortunately, got to do your own due diligence. I'm just reporting the news. And to summarize again, China joining the bandwagon with additional liquidity to boost these markets and keep them going. I don't see this ending, people. I do not see this ending. Make sure you like, share, and subscribe, and click that bell to be notified about more repo news, crypto and non-crypto market turning events. It's your boy Crypto Blood. That's my 2 cents. I'm out of here, people. Ha!
Push your shoulders off. Ladies is pimps too.